Well, Bruce, the high-frequency data is playing ball with the PMIs and this morning's jobs indicators all adding to optimism. For how long is this rally sustainable?
I think it has a ways to go. The markets entered 2018 with a lot of momentum, not only in the equity markets, but also in the economy and the global economy. And I think the big underestimate for most economists and some investors in 2017 was really the power of the U.S. economy, and it's certainly coming forward. And all of the earnings beats have been on the upside, and all the economic surprises, of course, have been on the upside, and we think that that's likely to continue.
We have seen some revisions downward when we get a second or a third revision to the data. Anything concerning to you, or does the economy look to be powering ahead on all cylinders?
Yeah, I think there's two risks to the markets in 2018. One is that earnings don't meet expectations, and with valuations stretched as they are, the markets would be vulnerable to a negative surprise there. The other risk, of course, is if the economy surges from here. We're already operating at potential. If we rise above potential, inflationary pressures are likely to increase and interest rates could follow suit. And if the Fed gets too aggressive here, I think that would be the second risk to the markets. And I would think that's the greatest risk to the market as opposed to the earnings situation we just discussed.
Bruce, it's been a long time since the U.S. market experienced a 3% correction. Let's not even talk about, double-digit declines. What's going to trigger it? How long can it go without, falling these sorts of levels?
Well, I think there's two things that could trip the market up, and I don't think it's any risk saying that we're going to see a lot more volatility in 2018 than we did in 17. We don't think investors should think 17 as being a new normal. Typically, the market corrects 5 or 10% in every given year, and we suspect that'll happen this year too. And two things that could trigger that would be, one, investors get too optimistic, and sentiment really is surging here as we speak. And the second threat, of course, is that the markets typically are volatile during a midterm election year. So as we move closer to the midpoint of the year, I would think the markets would become more vulnerable.